Hi there and welcome to this video where I'll be explaining my 10 most used Bitcoin investment indicators on TradingView. These indicators are important because they can provide you with some long-term insights on the direction of the Bitcoin price. Not only do these give the information you need to make investment decisions and enter the market, they also can provide you with the necessary knowledge to exit the market as well. I think inner peace and trust in your Bitcoin investment is absolutely necessary, and it will also give you some protection against the market FUD or FOMO that is out there in the crypto space. That's why I will tell you about 10 indicators I regularly consult to see if Bitcoin is still on track and when I should enter or exit the market for optimal trading results. Also, I will show you these indicators on TradingView, but know that there are a lot of websites where you can consult these charts completely for free as well. Just check out the description for more information on these indicators and where you can find them. Now, here it goes. Oh wait, before I continue, I want to inform you that this is not financial advice. I'm not a professional or consultant, so everything I say is my own opinion. Do not blindly follow these guidelines, but always do your own research before entering or exit the crypto market. These markets are very volatile, and if you do not follow your own strategy or investment process, it will get you wrecked at some point in time. So now exit these formalities and let's begin with the first indicator I use. This should not be a surprise, but watching the moving averages of Bitcoin tell a lot about the phase the market is in. The most important moving averages I think are the 20, 50 and 200-day moving averages. But do not be afraid to try to find your own specific best moving average. The TradingView indicator I show you here is very convenient. It shows you multiple moving averages on one chart. So if you have a free TradingView account, it will give you room for 2 more indicators on your screen. You can also select the moving averages you think are the most important and keep a close eye on these. These averages are also color coded, so it is very easy to see at which side of the line the price moves. The other thing about moving averages is that almost everybody watches them. So when the price of Bitcoin crosses a certain line, everybody sees this and will probably act on it, therefore creating a self-fulfilling prophecy on these events. As you can also see from this chart, the 20 and 50-day moving average act like a short-term and medium-term support. And the 200-day moving average acts like a bull and bear market indicator. If the price is above the 200 SMA, then it's considered a bull market, and when the price is below the 200 SMA, then the market is considered bearish. You can also see that the price bounced off the 600-day moving average, which is roughly the 21-month moving average, so moving averages do indeed prove their value. The second indicator I regularly use is the Puell Multiple. The Puell Multiple is an indicator that was developed by a Bitcoin enthusiast, Trace Mayer. With this indicator you can check for Bitcoin overbought and oversold conditions. During oversold conditions there are good opportunities to dollar cost average in and buy Bitcoin. But when the price of Bitcoin is overbought, then it's a good time to dollar cost average out and take profits. The Puell Multiple is calculated by dividing the current price of Bitcoin by its 200-day moving average. When the outcome is 1, then the price of Bitcoin is the same as the 200-day moving average. When the Puell Multiple is lower than 0, and especially lower than 0.7, then investing in Bitcoin by dollar cost averaging into a position could be profitable over time. But when the indicator is higher than 2.4, then this indicates that the market is overbought and the retracement to the 200-day moving average is bound to happen. Here you want to dollar cost average out of the asset and take profit. There are 2 ways of showing the Puell Multiple in TradingView. The first one is using a subchart with a calculation of the Puell Multiple and 2 lines that indicate the buy and sell regions. The second way to show the Puell Multiple is to use an overlay on the Bitcoin price and see where the price of Bitcoin is higher than the Puell Multiple. This line is actually the 200-day moving average times 2.4. My personal preference is actually plotting it on the main chart, so to give an idea of resistance and support. But of course it's totally up to you how you want to present this indicator on your chart. The third indicator I often use is the network value to transaction ratio, which is created by the well-known Bitcoin analyst Willy Woo. This ratio also indicates if the Bitcoin price is undervalued or overvalued. When undervalued, you have buy opportunities and DCAing in is a good option. And when the price is overvalued, then there is opportunity to take profit and DCA out of the position. The NVT is a calculation of the market cap of Bitcoin divided by the daily on-chain transactions volume. So if the price of Bitcoin rises against the on-chain volume, then the NVT signal rises and vice versa. The added moving average can have an additional function of giving buy and sell signals. And also there are two value levels added to the indicator, one that indicates buy signals and one that indicates sell signals. So it's very easy. When the NVT signal gets below the buy level, you could start DCAing in on Bitcoin. And when the NVT signal gets over the sell level, you could DCA out to lock in profits. The next chart I often consult is the Bitcoin hash ribbons chart to look out for Bitcoin price bottoms. This indicator makes use of two calculations of the hash rate. The first calculation is an average of the Bitcoin hash rate, which is the computing power to mine Bitcoin blocks. And the second calculation is the 60-day moving average over that hash rate. This indicator makes use of the knowledge that miner participation to the Bitcoin network actually has some form of predictive value. When the price drops, miners usually do not give up mining Bitcoin until the moment they cannot make any profit anymore. After that moment, the 30-day hash rate average will cross the 60-day moving average of it and miner capitulation signals will flash on the indicator. But most of the time this signal actually indicates that the bottom of the Bitcoin price is in, but beware that prices can go down further though. This signal can also be interpreted as the moment where you, and you might have guessed it, can DCA in and start to buy Bitcoin. When the price of Bitcoin rises and miners start to add their nodes to the network again to compete for block rewards, the hash rate goes up again and at some point the 30-day moving average line will cross the 60-day moving average up again. This is a buy signal for people that want to be more sure that prices will probably go up further. On the Bitcoin hash ribbons there's no indication that the Bitcoin price reaches its top, so for that I will use the next indicator. And this is the Pi Cycle Top indicator. It has predicted the top of the last 3 bull markets with a very high precision, and it consists of two relatively simple elements. The 111-day moving average and the 350-day moving average multiplied by 2. Every time the 111-day moving average crosses above the multiplied 350-day moving average, then a top signal occurs, which indicates that the Bitcoin price has probably reached its top. And that could be the moment where DCAing out of the asset is most profitable. You can also think about starting to sell out if the 111-day moving average comes very close to the 350-day moving average, or you can wait for the actual signal of course. The reason why this indicator is called Pi Cycle is that 350 divided by 111 is 3.15, which comes very close to the number pi, and for all you people that don't know what the number pi is, it's actually 3.14. So all in all, again a nice tool to have in your toolbox for predicting cycle tops. The next indicator I want to introduce is the Puell Multiple indicator. It was created by David Puell. His thought about market bottoms and peaks comes from the miner's revenue perspective. The background of this indicator is that miners always feel pressure to sell their earned Bitcoin. They need income to keep their infrastructure up and running. These miners have costs like electricity, network equipment, bandwidth costs, personnel, the mining equipment, the buildings and much more. And all that stuff is paid by selling the Bitcoins they mine. Now the value of the Bitcoin they sell on a daily basis is called the miner's revenue. Puell compared this with the daily value over the average value from the last year, and the indicator he got from this was eventually called the Puell Multiple. The interpretation of this indicator is as follows. If the Bitcoin price is high, then the daily revenue of miners is also high in comparison to its yearly moving average, and there is no big selling pressure on these miners to cover their costs. You can say that at these moments demand is high and supply of fresh Bitcoins on the market gets low, so this could lead to even higher prices. There can also be moments when the price of Bitcoin gets so low that the selling of those Bitcoins does not cover the cost of the miners. So at that moment, miners need to sell more Bitcoins to cover their costs. At these moments, miners could even dump all their coins on the market to cover their costs, therefore creating more supply than demand. And at these moments, prices could even get lower. To detect when the revenue gets too high or too low in comparison to its yearly moving average, the Puell Multiple uses two additional bands. an upper band that indicates that miner revenue gets dangerously high in comparison to its yearly average, and a lower band which indicates that the revenue is too low in comparison to the average. So when the revenue is in the upper band, it could mean that the Bitcoin price is too high and it's time to get cautious and maybe try to DCA out on your position. But when price enters the lower band, then you could say that the prices are getting too low and it's time to slowly invest in Bitcoin. And after you have made that investment, it's time to sit in your hands and wait for the indicator to get into the upper band to sell again. Now let's move on to the Fear and Greed Index. I think that the Fear and Greed Index is based on Warren Buffett's saying, "Be fearful when others are greedy and be greedy when others are fearful." The Bitcoin Fear and Greed Index is traditionally a combination of other indicators like volatility, market momentum, surveys, social media, and even the Google Trends Index. Now this indicator ranges from 0, which is extreme fear, to 100, which is extreme greed. The whole point of this index is to detect when the market becomes so full of fear that it's highly likely that the market bottom will be formed around that time. Then it is time to think about investing in the market. And the same thing goes for the greed phase, where a lot of retail and investor FOMO is present. Then it is time to think about gradually taking profits and slowly exiting the market. But be aware that just like every other indicator, the Fear and Greed Index does not guarantee that markets will go up after the fear phase. It's likely and probable, but not certain. This also counts of course for the greed phase. Greed could last a long time and markets can go parabolic during these phases. So always use this indicator with other tools in your toolbox to make the correct investment decisions. Another indicator I consult to make out if we're at the bottom or the top is the Bitcoin market cap gained by dollar indicator. I have to admit that I don't actually quite know how this indicator is calculated, and the TradingView Pine code is also not shown. However, the idea behind this indicator is the market cycle from accumulation phase to distribution phase. The accumulation phase happens at the bottom of the market cycle and distribution at the top of the cycle. During this distribution phase, there's more demand for Bitcoin than supply and prices could go parabolic. However, wise investors should think about selling their Bitcoin at that time to lock in profits and wait for the new cycle to invest. So every time the blue indicator touches the bottom band, which also happens to be a Fibonacci line, it indicates that accumulation of Bitcoin could be a wise decision. Especially when the green 200 moving average of the indicator is also shown below the orange total average line. If the blue indicator line is near or touches the upper band, then the distribution phase is at its peak and the market cycle top is near. Slowly DCAing out of the asset over time could be a wise decision. And that's how I roughly use this indicator. Now the last two indicators of this video are more helpful to find boundaries or support and resistance. The golden ratio multiplier uses the 350-day moving average as the base for the other trend lines. The original author uses this moving average to determine if there's a bull or a bear market. You may recognize this moving average because it's also used in the Pi cycle top indicator. Fibonacci calculations are also added to the 350 DMA to draw new lines that imply support and resistance for the Bitcoin price. So the indicator draws other lines that are calculations of the 350 DMA, like the 1.168 times the 350 DMA, or 2 times 350 DMA, 5 times, etc. And as you can see in the image, every time the price of Bitcoin is above the bright blue line, which is the 5 times 350 DMA, the market cycle top is reached. Also, some lines react as a resistance line, where price is touching the line and then retracts to the nearest support line. Below the 350 DMA, there are also lines drawn, which are the 350 DMA divided by Fibonacci numbers, like 350 divided by 1.414, or the 350 DMA divided by 1.618, or the 350 line divided by the 2.414. When the price of Bitcoin is below the 350 divided by 2 line, which is the gray area, then this indicates a new buying opportunity and time should be right to DCAing in on the asset. And as you can see, I would not be surprised if the Bitcoin price would dip into the gray area one more time before we finish this bull run. So it could be that we see prices of the previous market cycle top one more time before we head off to new all-time highs. Just like the golden ratio multiplier, the logarithmic growth curves form a band around the Bitcoin price to show lines of support and resistance. The growth curve is calculated with the historic price data and the log growth function to calculate a logarithmic median line on the Bitcoin price. The upper line represents the top range of the bull cycle and the lower band presents the lower regions of a bear market. The middle line is the median of the top and bottom. And you can draw lines in between with the help of multiplying with Fibonacci numbers, just like in the golden ratio multiplier, and they all act as a support and resistance line. Now, use of this indicator is also pretty straightforward. As you already might know, Bitcoin has market cycles where the price ranges from the bottom to the top of the cycle and back. When the price is in the lower bands, Bitcoin is in its bearish phase of the cycle, and investment in Bitcoin could be a good opportunity for the future. On the other hand, when Bitcoin is in the top of the cycle, prices are probably in the high bands, and exiting the market with profit could be a great decision. The other advantage of this indicator is that you can project the top, median and bottom into the future to predict what the price range of Bitcoin will be. So in a way, this indicator also helps you with dreaming to become a crypto millionaire. And so there it is, 10 indicators that you could use to determine in which state or phase Bitcoin is and how you can act on it. As said earlier, I use these indicators to stay sane in market conditions where the FUD or FOMO is at its highest. It's very important to have a plan in place and act upon it under the correct circumstances. And there's nothing to stop you from investigating which of these indicators will suit you the best. And of course, you should also think about combinations of these indicators. By doing this, you can get different perspectives from the market and see in one glance in which phase Bitcoin is at the moment. Hopefully, you then can make the right investment decision and get profit from the market. In any case, do your own research and be aware that nothing is guaranteed in crypto, so only do investments with money you can afford to lose. This video is not investment advice, but for education purposes only. And with this, I am at the end of my video. If you like this video, please click the like button and subscribe to my channel if you haven't done already so. If you'd like to see me making more of these videos, then please leave a comment in the comment section. And as always, I'll see you in my next video. Goodbye!